Hey everybody, welcome to today's 5-minute financial markets. Kind of a kangaroo day today, markets just bouncing all around. You see we opened with a gap lower. Yesterday's close was right up here around 395 and we opened down here at 390 and change. Kind of bounced along this 390 level for most of the morning. If you haven't seen SPY, these $5 increments are often really strong levels of supply and demand, support and resistance. So that 390 level supported this whole first part of the day. Something happened here around 8:55 this morning Pacific time. I don't know what, but it launched the market up. We filled that gap by midday, and then right here at 395, again, another $5 increment. That's where we found supply, and that created some resistance. The market sold off a little bit from there, retraced some of the gains from earlier right back to where this 8:55 a.m. run up started, found a bottom there, and then rallied into the close. Really bullish close, in my opinion. If you look at the daily chart, ever since this really disappointing CPI number back in October, the market bottomed right there on the 13th, near-term bottom at least. I think it's going lower eventually, but for now there's a near-term bottom. And we've just gone up this diagonal upward trending channel, mostly in the top half ever since then. We had that really good CPI number last Thursday, came in at 7.7% versus the 8 handle that was expected. Market blew up into this range that had that huge gap up. Today was the first day that we actually retested into the bottom half, and we dipped down there briefly, and then you see we closed near the high. Very, very bullish signal. Another thing that looks pretty bullish is the dollar. So let's get rid of these interest rate curves here and just look at the dollar by itself. The last 2 days heading into today, we've had these big wicks at the bottom, so the dollar's shown weakness and bounced up stronger. That tends to be bullish for the dollar, which is bearish for everything else, equities, commodities, all assets that are priced in dollars. But today we had the opposite. We wicked up higher and then wound up closing down at the bottom half of this candle, which shows that maybe the dollar is heading a little lower. We've had this big, big collapse in the dollar after a crazy strong run up for the whole 2022. Finally starting to show some weakness, found some support here, but I think this could be rolling over a little lower, and that would support my theory that this market has room to run all the way up to this big resistance line that we've seen all year. Started at the high in January, the high in March, the high in August. Every time we've hit this downward sloping trend line, we've rejected off it pretty hard. No reason to think that won't happen again, but we'll see. But in the meantime, I don't think there's anything to stop this market from getting up to that 408, 410 level over the next week or two until we get the Fed minutes November 23rd, which might throw something into it, jobs report December 2nd, and then the big news events are going to be the next CPI number December 13th, followed by the next day the Fed interest rate hike, which right now is looking like a 50 basis point hike. One last thing to take a look at is the VIX. So the VIX has been trading in this wedge all year long. It broke out briefly when we had those highs in August, but gapped right back into it, has been chopping back and forth inside this wedge. The last week, week and a half, it has broken out below this wedge, which is a good indication for the market. Volatility coming down means the market can go up higher in a more orderly way without these big 2.5% price swings in a day. But it's not convinced that it wants to come out of this wedge. It's still spent a lot of time every single day inside this wedge. The last couple days it's closed outside, but there's a lot of indecision right here with where volatility is going. The next few days are going to be very key for this. And then the last thing to take a look at, crude oil crushing today, selling off really hard, back to this previous support from mid-October. Presumably this is because those Russian missiles that were fired into Poland a couple days ago, turns out they actually weren't Russian missiles, they might have been Ukrainian, which it's terrible for the people involved, obviously, but is good for the region and the world because that could have potentially snowballed into World War III. The fact that it wasn't Russian missiles eases tensions in the area, eases concerns, and eases crude oil costs. So crude oil heading lower, commodity prices heading lower. That's good news for inflation, which is good news for the Fed, which is good news for the market. That's all I have today. Thanks a lot. See you next time.